I went into this deal thinking that the number that was given to me was a hard number because, you know.
It was at the best, from the best of my ability.
Kind of worried to even go to the back page now. I mean, is it bad?
It's more.
Like how much more? Like the loan
20%.
20%?
20%.
So you need $44,000 more.
At $44,290 in a deficit for funds to finish this project.
Jesus.
Well, that last little exhortation says it all. That was a sneak peek from the season 2 premiere of The Deed. It airs Wednesday on CNBC. Joining us now to talk more about the program and the market for house flipping, which is very hot these days, is Sidney Torres, host of CNBC's The Deed and founder of the private investment firm IV Capital. That guy needs an IV with some cash, right?
He does.
What went wrong there, and what's the lesson for others who would be inclined to flip?
So a lot of times people get into this thinking that, well, if I pay a little bit more, if I renovate for less, or I have friends that are subcontractors, I can renovate for less, that's where I can make up my profit. And so what happened in this case, he didn't fill out all of the subs. He left out appliances. He left out some of the other things like roofing shingles, items that you just don't leave out when you're doing a remodel. And so that was a huge 20% over on what he originally budgeted. And of course,
that's a pretty basic mistake.
It is a basic mistake.
Was this his first attempt at flipping?
It's not. He's a contractor. What? And you see the difference is, well, contractors, you have a change order and they make more money when they forget things like that, right?
How do you forget roof shingles? But then they should know that that's how you can get gouged.
True, but roof shingles, like you said, how can you, like roof shingles, it's a house that already had shingles on it, and he didn't think he was going to have to replace them. But after Katrina with wind damage, they needed to be replaced. So he didn't have a line item in the budget for that. So what's great about this season and season 2, there's a lot of takeaways. They have these classes and people pay a lot of money for seminars. There's all these learning lessons in season 2 that we didn't have in season 1.
So budget is important. And also knowing your neighborhood, I would think, is very important. Not falling in love with what you're doing. Because you hear and you watch some of the other shows, and people decide that they want to put this backsplash in the kitchen because it's marble and they love it. But that's not what the neighborhood demands.
Correct. And it sounds like you've done a little real estate. But it's important. That's
so flipper in your free time?
But it's so important. You have to know what the market will allow and what it accepts. For example, you look at your comps in the neighborhood. You see what's selling. You look at the quality of finishes, and you make sure that you value engineer it to fit what you're developing.
Everyone was looking at home flipping as a sign of the exuberance and sort of the risk-taking appetite leading up to the housing crisis. Where are we in terms of how strong of a comeback that is and what it says about the overall environment?
Well, I mean, my opinion is that there's limited opportunity out there now. So you really have to know what you're doing when you're looking.
Because prices have gotten high?
Because prices have gotten high, more people are in the business. A lot of these shows make it look easy. You know, what CNBC does is that they show you the financial side of how do you get in it and what are the things not to do when you're getting in it.
How about rising rates? Is that going to wash a lot of people out at this point?
You know, short-term flips, people are looking at it like, look, I'll pay a little bit more because I'm in and out. You know, long-term, like apartment buildings, hotels, that's where it's really concerning for the rate as they rise. But short-term flips, for IV Capital, my company, we do very well.
So give me a couple of touch points that will help me decide or look at a piece of property and say, that's a good candidate to be flipped and that one's not. What do you look at? What are the 3 things where you start?
So what I look at is where's the fringe and where's the hot spot, you know? And I want to be in the sweet spot, right? And sometimes the sweet spot doesn't work out. You might have to go a little bit towards the fringe. So when you're looking at that stuff.
In terms of neighborhoods.
In terms of neighborhoods, and it could be in New York, it could be wherever. You always have the hot spot, the fringe, and the sweet spot, right? And so depending on what your budget is, you have to establish that on the very front end. And you want to look for that. And when you find that location, it's very important that you value engineer it to make sure that you're not over investing.
But to that point, you have to, if you want that fringe to become the sweet spot, you have to value engineer so that your comps are more at the sweet spot.
Correct.
Right?
You can't operate off of emotions like James did, where it's what he wanted. It's what the buyers want. And that's what you have to look for.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.